Hey everyone, it's Noel here. Today I'm breaking down the new, big, beautiful tax bill signed into law. Hey, whether you love President Trump or hate President Trump, guess what? This is not just another tax tweak. This bill is loaded with wealth building tools for business owners, real estate investors, and families. It's a green light for anyone ready to scale, build legacies, and move smart with their money. So let's dive into why 2025 is the most and should be the most strategic year we've seen in decades for you. So one, no taxes on anything, well, almost anything. So this bill introduces tax waivers for common working class and middle income earners. That means for tips, it's tax-free up to $25,000. For overtime pay, it's tax-free up to $12,500. Auto loan interest, you can deduct up to $10,000 on new U.S. assembled cars. Remember, it has to be assembled in U.S. Land loans, partially deductible under rural development rules. So what is important to you is it's about freeing up cash flow. Less tax on labor means you or your employees take home more. So it's great for morale and it's even better for reinvestment. And one of the big wins on this is with EBITDA. Say that 3 times fast. But that is earnings before interest, taxes, depreciation, amortization. Guess what? That is now deductible again. And why does that matter to you, you might be saying? Well, because capital intensive businesses, real estate, all right, manufacturing, construction can deduct more interest, helping them borrow, expand, and stay competitive. Less tax equals more retained capital for growth. All right. The next thing you have the Trump account. This is for kids. Every child born between 2025 2028 will receive a $1,000 starter deposit from the government. Parents can contribute up to $5,000 a year with tax deferred growth. So you think about this as like a Roth IRA meets a 529, but more flexible. It can be used for education, it can be used for training, it can be used for first home purchases. So if you were thinking about having a child or on the fence, maybe now, guess what? You're thinking about, I'm gonna go there right now. So just think about that. It's a generational wealth built in a tax efficiency. The next thing, SALT cap abolished. Well, it's really not abolished. So it's really $40,000 in deductions. SALT stands for state and local tax deductions. So it's a rise from $10,000 to $40,000. For households earning under $500,000, it reverts after 5 years. So act now. And why that matters is if you're in a high tax state like New York, New Jersey, or California, you can now deduct up to $40,000, freeing $5,000 to $12,000 a year in federal tax savings. This is especially useful if you itemize and own real estate. The next thing within this bill is the 529 plan expansion. So now it is homeschool friendly. So now the plan covers $10,000 per child for eligible homeschooling expenses. This was previously excluded. So if you're raising kids and building wealth, this gives you a full flexibility to educate your children at home. What if you have a business office in there? That might be another write-off in there, but talk to your CPA while saving on taxes. The next thing you have is the $1 million write-off window. And this is for business owners and real estate pros can now spend up to $1 million on family payroll, equipment, vehicles, tech upgrades, leasehold improvements. So instead of depreciating over time, you deduct it right now, and this cash flow can really be a rocky fuel for anyone trying to scale. The next thing is that death tax. So estate exemption has doubled. Estate has a double really. So it's $15 million per person, $30 million per couple. So it's indexed to inflation. So no 2026 rollback. So what this means for you is that you can transfer more of your net worth tax-free. So no more fire sales of properties just to cover IRS bills. You keep and control your heirs with what you place in there. One of the things that I'm really pumped about, as a fund manager, is 100% bonus depreciation is permanently back restored. So all qualified business properties, acquired after January 19, 2025 are eligible. So it's eligible for 100% first year write-offs, includes improvement, vehicles, equipment, computers. This is so great. So you should add a cost segregation study in your real estate portfolio right now, or revise it. Even while cash flowing, it's just a tax smart real estate superpower right now. So you want to go with that. Also changes. Section 179 is expanded to a 2.5 million cap. So you can now expense up to 2.5 million per year, and it's phased out at 4 million. So the eligible items for that are HVAC, fire and security systems, roofs for non-residential only. So you can use this together with bonus depreciation. This lets you zero out your business income legally. So, oh man, so good. Next, QBI deduction. So it's been enhanced, it's permanent, and it's inclusive. So you have 20% deduction and pass-through income that is now permanent. So the threshold has been raised to 150K joint and 70K single, and it's a minimum $400 deductible right there. So it's good for LLC owners, real estate investors, freelancers. This is really a permanent tax shield for you. So you also have estate planning on steroids because the sunset provision is gone. You can now lock in $15 to $30 million in exemptions. So use trust and gifting now. Avoid estate shrinkage for decades to come. 2025 is your year to prep. Don't miss this. Don't miss this trust structuring window. 1031s really kind of stayed intact. It still means like-kind exchanges, 45 days to identify, 180 days to close a property. So still one of the most powerful tools to grow a portfolio tax-free. So it's really no surprise they didn't touch it. Why? I'm glad they didn't touch it because, real estate is America's favorite wealth vehicle. There is some opportunity zone reform starting in 2025. So new zones every 10 years. There's a 10% step up in basis. After 5 years, 30% for qualified and rural funds. 15% at 7 years was now removed. So now investors can get more clarity, plus rural expansion incentives. So expect new funds, especially for farmland, distressed towns, and secondary markets, that's really start going. Capital gains is still intact, still preferential at 0, 15%, and 20% bracket stay. You have the carry interest rule still at a 3-year hold. The new, what is that thing for the farmland gains? I forgot. I'll go ahead and get that later in the email. But as rural sellers and landowners get more flexibility and liquidity with it. I'll get what that is. But for funds and syndicators, big moves ahead. Big moves. Bonus depreciation always faces the LP. Section 179 is usable in active structures. QBI expansion helps mid-income fund managers. You can now structure your fund and syndication for higher LP write-offs, better general partner comp plans, smarter use of pass-through tax shelters. So, really, let's recap your 2025 planning window. I'm excited for this, all right? So you really need to reevaluate your entity structures, refresh your estate plans, upgrade your cost seg studies, watch out for opportunity zone rotations, and remember, real estate is still king. It's still king. And I want to touch more on opportunity zones, so I want to give a matrix out because it's so much goes into opportunity zones, and I think we need to touch on that some more. So maybe we'll do a whole session on that. But entrepreneurs, investors, builders, you got clarity, you got tools. Now you need a plan. Let's do this. Let's go. Let's make 2025 your best year. Let's go.